I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Everybody, welcome back to CTA Review. Today is April 5th, Friday, 2024. Hope you had a good week and a good day. So today they decided to hold that as support. I was mentioning in yesterday's video, somewhere around, well, you got to go watch it. But anyways, I said I was thinking of two ideas. Either they were going to come below and break that low and be bearish, and it could have either done, oh shit, it could have, started speakering out, right? And still came back up, but that would confirm to me bearish, right? Or straight up. And I was mentioning that as this would have to be a big day and it would have to be really bullish. So that being the case, and we're inside this March 15th Friday down wick on this day, this demand wick right here, this is a rejection. So algorithm will seek to do that. So they did take out that low. They came a little bit lower. And then they did not take out that low. So this low right here, I'm talking about right now on the 4-hour, this March 15th, excuse me, this 2 p.m. candle, the body is lower, right? So that's more in control of this support area. So super game, but that the body's lower and we don't take that low. But we're still in this range from higher low to higher high. So with saving face, I call it, they'll push it all the way up, right? And they're obviously trying to wipe out sellers. So because you didn't get the continuation of NFP news, doesn't come all the way down. That would be a different scenario. But what they did is they just decided to take liquidity, period. So to make this, try to make this short. So me personally, I did my taxes today, so I was gone. So I did not trade the AM session. So I did wait for a PM session trade. And you'll see here that, okay, two things. I'm not saying that we can't get bearish from here because of this price action. This is bearish order flow, but on the higher time frame, I mean, even higher time frame is bearish order flow, obviously. But again, we didn't take this low. So nice reaction there. And it's Friday, so you get that pullback, right? And generally the price will cap out on Thursday, or you'll have like if it's a bearish week, you'll have the high of the week. If it's a bearish week, you'll have the high of the week Monday, Tuesday, or Wednesday, obviously, right? And then the low of the week will be Thursday or Friday, right? Very, very simple logic. That you should go back to this. That you should use even in your own trading ideas and flow, right? But they had to save face and they pushed the price up. So you see that, right? As you can see, and then that gap is also protecting it as well. But nice reaction there. So I'm not saying we can't. Now that we have this, we kind of have this flow, and obviously, well, before I even get into that, let me just go into the day. So this is try to make this easy. So if you look at the 15-minute, forget the fib right now. So as you see here, we take out this low here at oh my god, what time is that? Can't even think straight. I think this is what is this, 8:30? Jesus. That low right there, right? And so then, and this is a big reason why I say people you don't need to trade. You don't need to trade the news. You don't need to trade before 9:30. For what? You're trying to catch that low? Yeah, okay. You're trying to catch that. What are you trying to really do? And then if 9:30 even comes, 9:30 is right here. This candle right here, right above my cursor. This candle. So as you see, you come up and you come down, and then you come back up. So nice speaker, confusing, but you wanted to, generally you can wait the first 7 to 10 minutes, 15 minutes. But in that somewhere in that sweet spot, you can allow it to do what it's doing, and you didn't miss anything. I mean, what's the if you think you have to catch this, then you don't understand this game. Me personally, I would rather not be involved. So what does it do? Price comes down and it comes into a beautiful area. So with this understanding that the NFP created this big wick, if you do 50% of that wick itself on this time frame, you could on a lot of time frames, the hour, the 15, even if I went to a 15-minute, not 15-minute, I mean sorry, 5-minute, you'll see that we'll have also the similar wick, right? So forget this fib right here. Let me just delete that for a second. But just measuring the wick only, it's a gap. They'll look at it as a gap. And let's see if I can make this quick. Okay. So understanding that, I mean, this is just this time frame, right? I think the other ones are very similar. They're a little bit different. Is it a little bit different here? Let me see. But you'll understand the point in a second. The goal is to get into a high confluence area, right? You're not trying to push the button random, okay? But so as you see here, just a 5-minute, right? So price retraces back and gets real close. I mean, it's what are we talking about? We're talking about a tick, one tick, right? So you're in the right area, number one. Number two, you have the opening range. Let me go back to 1 minute because it's just, for me, much more clear. Let me open this up. So what the price did is it shot down. So it wiped out liquidity. So you got kind of like a speaker going on here, right? So you have a low, you have a high, you have a lower low, you have a higher high, you have a lower low, you have a higher high. You see that? So, I mean, if I drag this out a little bit, it's going to get a little ugly, but you can see it. Okay, so you have a low, you have a high, you have a lower low, you have a higher high before it rushed up. Because when NFP popped out, it shot down first. So higher high, lower low, then higher high. Okay, so now you got a speaker there, right there. You see that? I mean, obviously this isn't drawn out, but these are still lower lows. What did they do? They just wanted to wipe everybody out right here before they shot up. That's really the logic. But again, here's to show you that you don't need to be involved. Number one. Number two, and let me put this correctly because this, just so you can see it here. So pushes down, shoots up, breaks that high. Now this is a shift. So we have a shift here. All right. And this is still a speaker. Price comes back. Obviously, it has to break through some direction, right? So what does the price do? Speaker comes back to under 50% of it, right? And then it comes to also this imbalance on the 1 minute here. Also, I'm gonna delete that. The 61. Look at the fib on a 61 right here. Look to the right. Beautiful. It also comes to the 50%, a little bit lower, but generally speaking, the 50% of the opening range. This box right here. All right, you have that confluence, and very common, you have this down candle right here, this 8:32 a.m. Why? Because this is a lower body. Prices already came above. So when they created this wick at 8:30, when we created this wick, you see price kind of slowly coming down. If I measure this wick, pretty sure that's 50% as well. So let's do that. Let's do this to here. Kind of hard to do this with all this shit on the chart. Well, let me go backwards. All right, don't get confused with all this shit here. Let me just make this a 50 level. Very close. Didn't hit it. Very close though. But the idea is that you're trying to be in this top 50. You don't want it to go below. You don't need to. It's mitigated. Most of it And then also you are sitting where you're sitting at the opening gap. So we have the original gap that we've discussed in gray. Then we have this in little red. We have the opening gap of today. So, okay, so more confluence there that this price is going up, right? It came down and then it's going up. So there's no reason for it to come back down again. We've already wiped out liquidity here. I'm framing this understanding. Okay, what are the other confluence? So with this candle I was talking about, 832, this 1 minute. 832, very common that it will come back to that candle. And because the body is lower than these two previous candles, this 8:32 a.m. candle, the body is lower, so we're going to use that candle. And while this price action is coming down, it doesn't break the low. See, if you take a look at the low of the actual candle, we don't break that candle, obviously, right? So now we have a very good place to buy. Now, you also, what is the final piece of confluence? You have the opening of the midnight level. The midnight level, anything, if you're bullish, below the midnight level is generally a good place to take the buy. It's the fake swing. It is the manipulation down. So you have the accumulation, you have the manipulation down, and then you have the distribution up, right? So with that understanding, it's also slaying on the opening of the midnight. So with being bullish, that's a perfect buy. You have all these confluences right here, right? So let's just say you missed that trade. Well, then once this 1 minute candle closes above bearish like that, bullish like that, and you are above this inversion imbalance, take notes, go back test this. You're getting super game here. So, all right, let me drag that out. You see that? Very clear. So the price closes above that imbalance, that inversion imbalance, and that's showing strength. And obviously they continue to keep being solidly bullish candles, and they never get their lows taken. So these gaps right here are a way for you to not get involved, for you to have missed the trade in a sense. But remember, this was a shift. So we popped up, we retraced back. In simple terms, we just retraced back to almost 61. You don't need this fib per se, but I'm just giving you the logic. And it's a shift. So you're the higher high, higher low. That is a higher high. That is a higher low, right? So you got your flow. You already got your flow going. So now what do? Well, we come up. We make drive one right here. All right, and it's a speaker in itself. Very confusing, right? Comes down, comes up, comes down. But in reality, this is the higher low. This is the higher high right here. This is the higher low. This is the higher high. This is the higher low. I'm not talking about drives. I'm just talking about simple price action. Very confusing, but this was really, this piece coming down is what I'm trying to say is this is, oh shit. Hold on a second. This is the real range, but very confusing. I understand. So that's the real range in this sense. Now, it doesn't come to a 50%. So, and I'm framing this for in a moment. I'll tell you why. So, why that matters. So, but anyways, you get the price shoots again, comes back deep, gets into that, gets into this wick, same level. See that? And that's why my entries are always in wicks. Okay, so and that it mitigates that wick. So higher high, higher low, higher high, higher low, retraces back. And this was very simple, basic support resistance framework in this day. Very easy. I mean, it technically was really easy. And that's why a lot of support resistance traders win, because of this logic. So if I was to just make a general statement and level, as you see, this is resistance, then turns support, right? As I drag up, you'll see the same thing here. All right. It's resistance now turns support, right? And so on. But with this higher low, makes a new higher high, retraces back, any breakout artist. Same idea with this. So if anybody was a breakout artist through here, they come back and they try to test that level, making sure they don't get in. But in reality, some support resistance traders are. So you have momentum traders. So you have two types of things going on here. Obviously, three things. You have the breakout artist, right, that just buys on momentum. Then the price comes back because they want to make sure that they got those people out. And then by squeezing them out, the price is ready to keep going. But then you have support resistance traders that get involved. So any support right here would be also now involved, obviously. So that's the logic of just the price action, right? Which is no big deal. So then, but as you see, we have too many drives. So for example, this was the last legit drive. From this high to this low, this came to a 61. Now when I come to here, you don't see the 50 getting hit, right? Right here, you still don't see the 50 getting hit. Right here, you still don't see the 50 getting hit, right? We'll drag it all the way up. Okay, so now that we understand this range, right? And yes, there's a multiple ranges going on. You're in this higher time frame range. If we're bearish, you have this from this high to this low that we made, which is the raid. We also have that bearish range that you are also in, right? So when I'm using this down fib, I'm asking myself, well, where is it going to stop, right? And I don't mean stop for good. What I'm saying is in general speaking, where is it going to possibly stop and sell off, and not sell off permanently? I'm just saying as a big retrace. Well, if you're measuring it this way, coming to the 70 doesn't have to be perfect, but in general, this is when you're using a fib, you're not using it to be perfect or perfect levels. You're using it to have an idea of where a zone would be likely or high probability, right? In this case, I'm using, again, I wasn't a part of the AM session. So in the PM session, I'm wondering where is it going to stop, so to speak. So here, at this point, I understand we have drive 1, we have drive 2, all right, because this is a pullback. This is a real pullback. This is a real pullback, all right? And then drive 3. So drive 3 in this case, you might think that's a real pullback, and it's not bad, but this is they created a resistance or buy side liquidity, and it pulls up and raids. So this is kind of like what I'm waiting for a nice sell back down. Okay, so we also, what are the confluences of also having that 70 area? And now it's not perfect, didn't tap it exactly, but it's in the vicinity. Well, we also have this low that we made on this low right here I'm speaking about here. This Thursday at London, 3 a.m., 15-minute candle, that low. So I'm dragging it out here because it's missing it by literally a point. Okay, 1 point. But that doesn't scare me to take the sell. I just know that this pocket of area is a good place to find a sell. Why? Because we've already came back and wiped out anyone that was selling from down here. Any breakout artists from that low, from that low, from that low, from that low, right? That's the whole point of buying up here. I talk about this every day. But with the idea of the confluence of the 70 level, with that level also where breakout artists for buyer's remorse, if anyone was buying here, they're getting their opportunity to get back out. Number 3, anyone who's momentum trading through that low, we've came back and shook them out, and it's a good place, right? So with that understanding, you'll see here that I will take the trade. Now, I was concerned that we didn't tap that low that I just spoke about, but here's the reason why I take this trade. Because of everything I mentioned, but number 2, there's plenty of times where I've waited for this level to, and I've made a video not too long ago about saying this, but I would wait for a level like this to get hit to then take a sell, and I'll miss it by a point. So what are the other factors that I have going on here? Take a guess. Push pause if you want. You might not get it anyway, but okay. So if you're thinking this overbought area, that's not a bad conclusion. So because that was one of the reasons, but the more important reason is because it's 1 o'clock. It's 13:01. I've already got in. I've already got in on the 1 o'clock candle. Okay, so I'm sorry, not the 1 o'clock candle, the 13:01 candle. So this yellow bearish candle that's coming down. I got in immediately as soon as it opened. Because why? I have, number one, it's 1 o'clock with this middle candle. It's a swing high. We just came up and rated this level. I'm in this area, I mentioned, but the time factor, the PM session will either start, well, it does start generally at 1:30, okay? But lunchtime is over at 1, okay? From 12 to 1. But the real PM session starts at 1:30. You will, and you can go back test it. We actually, to be honest, we actually sold yesterday at 1 o'clock. Yesterday, that big sell-off yesterday, look at the time, 1 o'clock. So the algorithm will start moving and going to its next objective at these certain time frames of the day. So 1 o'clock is included. And sure enough, this is the conclusion of why I do take the sell. So I have a lot going for myself in this area. Okay. So as you see here, the price, that 13:01 candle is bearish, and it's literally going right through this candle. Okay. So we have, this is it's all scrunched up because I wanted to get it all in one picture, but price comes down. All right. Again, I have to go back to this real quick. So here I'm obviously in early, like super sniper. Like I've been a sniper. This I see these trades. I've been trading like this for a very long time. Can you take a lot of small losses? Yes, but you're not supposed to be over trading. You're not supposed to be constantly taking shots like this. You have to have a lot of experience in doing this. This is not someone, even very successful professionals can't do that. And I know that for a fact. But the logic is that when the price candle keeps going down, as you see, it never gets filled, right? It stays completely empty. This is pretty much like a balanced price range, and we're expecting the price to then keep going. So if I was to highlight, it's a lot in this video, but if I was to highlight this inversion imbalance, this candle, this 1259, I'm hoping that holds as resistance. So as you see, the price comes all the way back up and it taps that inversion imbalance, right? To the tick, right? And then shoots the hell off, right? So that was my trade. I'm already in early, but I'm expecting this price action to, I'm hoping, let me put it this way. I'm hoping, because it is a hope in general. It could have failed, but I am expecting this to happen, right? And here's just to show you the way it looked. As you see, if you're sitting here waiting for this imbalance to pan out for you for a trade entry, you're asked out. You're not going to get it. So, it's just one of these type of trades. I mean, there's no other way I could put it. But anyways, so when the price is coming down here, okay, so if you take a look here, we bound. I don't have everything highlighted. I can't, man. But then the price breaks down to wipe out the liquidity. And now that we're here, I'm taking the trade at minimum. I'm taking the trade to 50% of this range and also this gap. And that's why I show a screenshot here, and I'm on the oversold. It's, I got from overbought to oversold. Hey, beautiful trade. I can't ask for anything more. The point of what I'm saying is that when I was telling you that we never got 50%, remember we were dragging this fib, okay, this range. Remember, this already retraced deep enough. That's a range to me. These aren't ranges. These are just building liquidity to me. And 1, 2, 3 drive. I know it's just 3 drives. Let me go to a 5-minute. Maybe it's more legible. But exactly, like this little pullback, like this can be a drive. Don't get me wrong, and I understand it can be confusing, but that little finale with that final big candle, that's what I'm looking for, because it's fake. It's making you think it's really going. It's not. But so I'm looking at it like once we broke this high, drive 1, drive 2, this whole area is drive 3. So manipulation, raid, and you want to, I don't want to take a trade unless it has rated price. So when you have all these equal highs here and they're just sitting here, you expect a raid. That's the raid I'm talking about. And then when you measure, now I'm measuring from this higher low all the way up to here. Oops. And then as I'm selling down, where am I selling into? 50%. Well, obviously it came a little lower when I screenshotted it, but this was the idea, was not only the gap, and then look how it comes to that 50%. So let me go back to 1 minute real quick, and then you can see it there. All right, so I can get out in the same candle, this 201 1 minute candle, 2:01 p.m. 1 minute candle right there. That's the same screenshot I'm showing you here, so you can get the idea. So it's the 2:01 candle. And then I screenshot it here and it dips a little bit lower. All right. So, beautiful, man. So it comes to the 50. Now that's a range. Now it's probably going to keep going up. So here's the thing. We have came back to a reasonable range. And now what happens from here? Does this fib stay in control where it never breaks that high? And then we turn around and roll over right here to break that low and then be bearish, which I don't know, man. My gut is telling me that it is, but at the same time, I can't fight that this is still bullish because we didn't take that low out. So if you take a look at the other assets on the higher time frame, I said this was most likely a crack, even though this is not necessarily a crack. It never came back in this range. And then it did shoot up one more time. So this break here, and you are getting bearish order flow. But, and yesterday I was saying that this is definitely a crack. Well, the order flow is definitely a crack to me. But they never came lower. Remember, I was mentioning that the only way to save this market is if we literally just bought the hell up from here, and it did. So I have to I'm neutral. At this point, I'm neutral. We do have CPI next week, so I'm still neutral, but it's suspect. I'm suspect. It's definitely suspect. It's much more suspect than anything else. So if this breaks this low and this is really just a lower high and we come back down, then that answers your question. If we come and break this high, just like any other high, if we break this high, then, and so Dow also bought the hell up, but very fucking suspect. This is bearish fucking flow. So, and they, see, that's why I don't trade Dow, because they could break this low and this means bearish for Dow, but it could still go up. And that's the reason, the exact reason why I don't fuck with Dow, anymore. But at looking at dollar, so the weird thing is that dollar shoots up here, gets to that gap, right? Tests back to that gap, but there's also a gap here. I didn't highlight it or anything. Shoots straight up to it and then reacts back down. So if you take a look at dollar, you also have a big range of here to here, and you see that it comes down underneath 50% here. And then if you take a look at this, we haven't done that yet. So, and because in this leg up, you also have this leg. See this? So from here to here, retraces back 50%. So that's a fair leg. Okay, so from here to here, all right, comes back very close to 50%. Right here. Very close. Did it hit it? No, it did not. So that's suspect too. But at the same time, um, it's a retrace is what I'm just talking about, right? So does dollar break down from here or does it go up? And that's obviously the magic question because it looks like it could retrace back down, or we could just thump against the overbought for a long time while we still slowly grind up. So that will kind of negate what we're going to be doing with the stocks. In my opinion, I'm thinking at this point, but that's a nice reaction coming back down. So I don't know. So if dollar starts breaking down here, then you can see us probably still continuing up, and vice versa, right? So also you had this is a long video, huh? But it's super game. You had a divergence here on NAS. So the NFP takes out that low, and S&P did not, and neither did Dow, which is also to me surprising. But that was your divergence to buy up. So, is there anything else I wanted to say? I don't think there is. It kind of looks like it's going to be maybe rebounding, but it depends. It all depends because everybody had a nice reaction today. Obviously, it's Friday, so you probably you generally will get that wick, the wick of the week, which is Friday to push up, and then if it's bearish week, it'll push up and make it a wick, right? But I mean, I don't know, man. If you ask me with all what's going on, I don't know. I just feel like Nas is not showing the break, but I just feel like S&P and Dow are already showing their cards. And does this become a lower high and then come back down one more time? So I don't know, man. But trade day by day. And there's also these 4-hour. I was hoping to get it today, but it didn't seem like it was going to happen. These 4-hour gaps right here. There's a gap in between both these 4 hours. So this is another thing why I'm thinking the market's going to come down first. I mean, it's going to come down. If it goes up or goes down, it's going to come down to these levels right here because there's gaps in between right here. So, I don't know. We'll see, man. We're dead center again. So you guys take care and God bless.